Publius from Beanstalk. Obviously, Publius and Ceazor, you two know each other.
Howdy.
Yes, howdy. Yes, we do know each other.
Thanks for
And
having
I feel
us.
I know you a little better. Hey, no, thanks for having me.
Well, I just wanted to coordinate this space so we could talk a little bit about Beanstalk and the plan moving forward for Beanstalk, but also I would love to hear, Ceazor, how a little bit about you and how you found Beanstalk, and then I'm really just here to bring this conversation together, and I'll let you guys don't mean to stand in the way of anything. So Ceazor, do you want to take us away?
Yeah, sure. So what I was saying before when you asked me like what was one of the videos that I kind of got excited about and I said it was something on Binance Smart Chain, and it was called a $, and it was an algo stablecoin. So it was my first venture where I had like enough money that I was willing to risk on something that was like, I had already learned about them, and I'd seen the failure of like empty set dollar and other stable coins, how they rammed up and then spiraled down to zero, and supposed to stay pegged but never did, right? So but then I was super intrigued with it because of like two major reasons. Like one, of course, like the ability to just print money out of thin air gives you the ability to give people money, a lot of money out of thin air. And I find that to be very interesting, intriguing, and actually great for people, like especially new people who are like not, financially secure, or, they don't have a whole lot of money to invest in a blue chip or, something that's not going to, go up so fast. So, the APYs can be quite high on these algo stable coins and so forth. And then the other reason is the fact that it's not backed. Like, having a collateralized stablecoin is great, right? Because it's the trust factor is there. Like people don't need to trust it. They don't need to. It's not backed by faith at all. It's just like I can redeem this for my USDC, so I know it's okay, right? I know I'm good. I know if it does go to bad, I can actually buy it cheaper and get back my dollar. So there's different use cases for them, right? But I really like the fact that it's decentralized, because I kind of do look at the US dollar as an algo stable coin now. Like it's not backed by gold. Like how people do say it's backed by infrastructure, by the government, by the military, by these sorts of things, the social structure. But there's no like gold. I can't go to the bank and say, hey, I want my gold, I want my diamonds, I want something tangible. So I feel like the algo stable coin was something that was interesting to me because it was decentralized, like fully. Like there's no USDC in the back. There's no way to shut it down. It's just there on the back blockchain. So that was the first project that kind of really made me interested in crypto, and like these guys are like printing money and just giving it away to like people who are using this, right? And I found that to be very intriguing. And then a lot of videos later, I came across Beanstalk, and I found it to be, when I first looked at it, I was like, yeah, this is the same thing. Like maybe it doesn't have the seigniorage, it doesn't have the bonds, and it doesn't have the share token that gets all the printing and stuff like that. But it's still kind of is printing beans out of thin air and stuff like that. So this is kind of the first question I have for Publius is like, why did you guys decide to make a credit based stablecoin instead of something more like a collateralized stablecoin or a partially collateralized like Frax or something like that? And then obviously what makes the difference between a credit based and a algo stablecoin? Like what is this major difference? Like this is all I'm going to really ask about the process, and then we'll get into the stuff more about like the problem and then the barn raise and stuff like that.
Sure. So the what is a credit-based stablecoin and why work on one? So fundamentally, and I think the reason we wanted to work on a non-collateralized stablecoin was because of the problem. So it almost answers itself from your second question, which is the current structure of DeFi, whereby the vast majority of stable coins in DeFi are collateralized in some capacity, means that they have high costs associated with them. And the costs are particularly a function of the fact that if you have collateral, there's some cost associated with locking up that collateral, particularly if you're going to do it on the scale of billions, tens, or hundreds of billions of dollars or more. The cost of locking up immense amounts of collateral is high. And therefore, the providers of the collateral to issue stablecoins need some sort of yield to compensate for that opportunity cost. So structurally, collateralized stablecoin models make it such that it is very expensive. Stablecoins are expensive in DeFi. And having expensive stablecoins makes doing all sorts of things that should be possible, like using Augur, for example, or other decentralized prediction markets, are really cost ineffective when you consider 10, 12, 14% carrying costs on the stablecoin you're going to use to denominate your decentralized bets in. And in short, the benefit of switching from collateral to credit is that there's no longer any opportunity cost associated with locking up collateral because there's no collateral. And furthermore, there's a lot of flexibility on how to distribute the seigniorage from a non-collateralized stablecoin or from a credit-based stablecoin. And that actually facilitates not just having a neutral carry stablecoin, but a positive carry one. And so the structure of DeFi, if it changes from negative carry stablecoins to positive carry stablecoins, we think will be significant. And in short, why did we start working on Beanstalk? It was serendipitous timing. We happened to be hanging out around the time that ESD was blowing up in a good way. And it was very clear to us that the rest of the market also agreed that credit-based or non-collateralized stablecoins were high value in DeFi. And, we decided to throw our hat in the ring, if you will.
When you say the cost of collateralization, the two things that come to my mind, maybe you can add to it, is one is of over collateralization. Like, you need more money to print less money, which is obviously not ideal, right? And then the other problem is like, for something like USDC, I assume there's some sort of like fiat fee, like when you go to Circle or Tether with $1 million, they're not going to give you 1 million USDT. They would probably give you some fraction, something less than that. They would charge you some sort of fee, or they would just, you would have to pay them a little bit more than 1 million or something like that. These are the two costs that you're talking about, like especially the over collateralization?
No, I would even make the argument that just the dollars that are in a bank account somewhere backing USDC, that's where the cost lies. Like, what else could you do with those tens of billions or hundreds of billions of dollars? Lots of different stuff, right? So there's a cost associated with it.
Okay, so like an opportunity cost or like a loss opportunity for that capital be used elsewhere. Okay, on to Publius. Okay, like you've been kind of anon for all this time, and that you've come out and you've given your names and your brief description of who you guys are and so forth. But I wanted to have more talk about like your DeFi history. Like you did get a little snippet that you were around during the empty set dollar. So can you give me some other ideas of things that you were playing around with in DeFi that really got you guys together and probably brought you guys as a team to be like, yeah, this is cool, and let's try to build on this and so forth? Like, I assume you guys didn't know each other like growing up or something like this, and that DeFi
so we're
brought
friends
you
from
together.
college, right? So we kind of had our own individual journeys through crypto. Just speaking on my own personal experience, thought that interacting with and using MakerDAO CDPs to mint DAI was really like a mind-boggling experience, and what it facilitated from a thought perspective of what's possible on chain if you get the economics right was very encouraging. And in short, was a big fan of and user of MakerDAO a long time ago, 2017, 2018, around that. I think 2018. And more recently, as it relates to Beanstalk, we were watching like hawks, and actually, at that point, because we had thought we were going to work on a fork, talking about it daily together and, playing these protocols together effectively, ESD, DSD, even TSD, like all of these iterations on ESD that had slightly different epic times and slightly different parameters. It was just from a data collection perspective, really important and helpful when it came to designing a lot of the things that went into Beanstalk. So we used a lot of those data points to figure out. I think there was even like RSD. There's like some crazy iterations that we watched of ESD play out, and all that data was super interesting and helpful. So a little bit of old and a little bit of new for you.
So would you be willing to share like any of the protocols that you got wrecked on? Like, were you in ESD and did you follow that down to the zero or anything like this?
I'm trying to remember. I'm trying to remember which ones were good. I think ESD was profitable, DSD was profitable, TSD was not profitable, and then don't think I participated in RSD, if I recall correctly. So a little bit of up and down, but it wasn't like it was large dollar value. It was more just to experiment with the protocols. But nonetheless, they had very short fuses. So it was interesting to watch them play out.
Yeah, they were pretty short-lived as well, some of them, right? I mostly played with these things on Binance Smart Chain because when they were alive on Ethereum, I couldn't afford the gas. I was just too small fish, too minnow. So I was over on Binance Smart Chain just doing the forks of the forks, and I got like a little bit wrecked here and there, but nothing like, I think overall I made more than I lost because of the ability to like take profits and get out and stuff like that. But onto the exploit. I don't want to spend a lot of time on what happened, but like, can you give just a quick little, just for those people that are here that don't know what happened, like what happened, just very, very simply, like to Beanstalk.
So, and happy to go into it in more depth if you'd like, but the short version is that on Sunday, April 17th, an attacker was able to take out $1 billion flash loan and deposit those $1 billion into the silo and acquire a super majority of stock and use that super majority of stock to commit a BIP, which they basically used to maliciously attack the protocol. So in short, there was a lot of sophistication that went into the attack. It was sort of a Trojan horse to some extent because the attacker made it seem like they were trying to donate funds to the Ukraine. In fact, they did end up donating funds to the Ukraine, but they also stole around $77 million from Beanstalk.
So I've read a few articles about this and some tweets and stuff like that, and the way I understand it in a little more depth than what you've said was like they put a BIP, they put 2 BIPs in, right? And one of the BIPs was like, oh, that was a mistake, sorry. I want this BIP to overwrite that BIP. But that other BIP had something in there that allowed them to like, use another contract to basically control to make some choices or something like that. So
it's not quite. So they deployed 2 nearly identical BIPs, BIP 18 and BIP 19. And BIP 18 called an address that at that time had nothing associated with that address. The BIP 19 was identical, except it called an address that had at it what was registered effectively as BIP 18 .sol on Etherscan, whereby it looked like that was code to mint 250,000 beans and donate them to the Ukraine. And so in effect, they created what appeared to be, that they made a mistake when they originally proposed BIP 18 and submitted it to the wrong wallet. And so they reproposed it as BIP 19. However, after 24 hours, when they launched the flash loan attack, they simultaneously, at the exact same time, deployed via Create2, which is an opcode that facilitates the deployment of code or a contract at a deterministic address. They deployed the malicious code to the previous address that at the time was, or prior to that, was totally blank. And that was what they used to exploit the protocol. So up until the very moment where the attack happened, it looked like, it was a little strange, but there was nothing, there might have been a yellow flag, but there were no red flags up until the actual moment of attack, if that makes sense.
Yeah, exactly. Yeah, because even if somebody went digging in there and they saw that contract, and they would be like, "Oh, that contract leads to nothing. That wallet's empty." So you would have to have foresight in order to see that contract will eventually have something, to some extent, right? Like to talk a little bit more about the exploit, like the money. Basically, what the exploit did was it emptied all of the silos, right? So it took all of the LPs out of the silo. And then the flash loan contract basically sold some of the beans and then dismantled all the LPs and retained. So the exploiter retained some beans, but then took all of those stable coins that were paired with the beans and the ETH, bought a bunch of ETH, and then tornadoed it away. Is this accurate?
So sort of. I kind of lost you there, Ceazor. So just to restate it, what the the attackers BIP facilitated was they could withdraw all of the assets from Beanstalk effectively, and so then they were able to take out the liquidity, and that facilitated the withdrawal of all of the value from Beanstalk. They didn't actually mint any extra beans and sell those beans against the liquidity. They just pulled out the liquidity, if that makes sense.
Yeah, it does. But did they actually sell any of the beans that they were able to pull out? Or the amount of beans sitting in their wallet is the entirety of what they were able to pull out?
I actually don't know the answer to that.
Okay.
We could probably look at the transaction and figure it out. But
yeah. I was just wondering. That's just a question of wonder. It doesn't really make a difference, but yeah, I just wondered. So here's a question. You guys got exploited. Now, why not just give up? Like, why not just be like, yeah, we got exploited. We've got no funding. We've got no money. Let's give up. Because you're obviously not giving up now. Because we'll go into the barn raise and all of this kind of stuff after. But I'm wondering what makes you decide, let's not give up. Let's keep going.
Well, would push back a little bit there on the personification, in the sense that Beanstalk was stolen from, and Beanstalk was attacked, and Beanstalk is down bad, but Beanstalk is not out. And ultimately, it has nothing to do with us individually. It has everything to do with Beanstalk and the community around Beanstalk. And in practice, I mean, what happened over Sunday and Monday was one of the most inspiring and humbling series of events of our lives, whereby a ton of the contributors and community members that were working on Beanstalk in some capacity basically just reached out and said, hey, we love Beanstalk. We're not going anywhere. And, this thing is going to rise back up. And what is there to do other than to run with the people, right? And so we've been incredibly inspired and grateful for the incredible community that has echoed a lot of those sentiments that you were saying, Ceazor. But if anything, feel like we've been riding on the backs of and the heart of the community over the past week, because on Sunday, when we woke up and saw what happened, it was like, really had our hearts ripped out. And from even a logical perspective, Beanstalk hadn't had really any sort of venture backing or traditional backing to date. And the concept that there was some bailout coming, a la what we've seen from the wormhole hack, for example, just seemed totally impractical and impossible. And so it's like, where does Beanstalk go from here? But it really was one of those incredible things that just people very clearly were not willing to let this die, and neither are we.
Yeah, that's awesome. Yeah, you can clearly see it. Like I was in the war room there, and it was a pretty big war room full of community members, and it wasn't run by the team, so to speak. It wasn't like the team, like, hey, let's everybody get together, call in everybody that you can. It was like a community grown like war room full of like ideas. And I saw you, I knew you guys were there, at least some of you, but you weren't like, you were kind of just absorbing it and just like taking in like what was the enthusiasm and the go-gettingness of this community to want Beanstalk to keep going. And I found that to be inspiring. Like I've been in a few war rooms and I've been around a few like hacks that have been pretty big and devastating. And it's not something that's easy for a team to take. Like it's not about like your money. It's about, you know, you feel the weight on your shoulders, right? Of something like this that comes down, right? So I found it to be pretty inspiring too, to this community, how they came together. They were brainstorming so many ideas, and just everybody just, you know, respectfully, like, you know, talking about like, what can we do? What can we do? How can we keep this going? How can we fix this? And of course, like everybody does have their own like incentivization. You know, they do have, you know, everybody wants their money back, of course, but like, at the same time, people can also just take the loss and go on, right? Like that's also possible, right? So I'm with you on that, and I do see that. So let's move on to the barn raise, and let's talk about that a little bit. Like, I read through the article that you guys posted on the blog, and I noticed that there are two phases. So when I was when I was in that war room and I was listening, this wasn't part of it, but there's these two phases. So let's talk about phase one. Like, what is phase one of the barn raise?
So it's funny, right? You keep saying you guys, and I think this really does go speak to how involved we are at this time. Was basically almost entirely uninvolved in the posting of the thing, but nonetheless can certainly speak to it. But you know, I think it's worth highlighting because of how awesome it is that, you know, there's so many different people doing different stuff at this point. But nonetheless, so what is the barn raise? And as you said, there's two phases to the barn raise itself. We tend to think about it as having three parts to it, but the first part is the barn raise itself, and it does have two phases. So from our perspective, it's a little bit easier to think about the first part in the context of the second part. So there will be a 3-day sowing period, whereby, for those of you that are not familiar with Beanstalk's model, sowing is lending to the protocol. So over a 3-day period, people will be able to lend to Beanstalk, and the amount of soil, the amount of dollars that or value that Beanstalk is willing to borrow is going to be around $77 million value to try to recuperate up to 100% of the funds that were stolen. And over those 3 days, people can lend up to the $77 million to Beanstalk. The interest rate on those loans is going to start at 20% and increase 1% every 10 minutes for 3 days until like 452%. And in short, as is the case with normally Beanstalk pods, the pods received for participating in the barn raise will be paid back on a first in, first out basis. However, unlike normal circumstances, the barn raise pods will not go to the back of the pod line, and instead they will be part of a new barn raise pod line, which will start at 0 and will receive a third of all new bean mints until it's been fully paid back. And so phase 2 of the barn raise is this 3-day sowing period. Now, phase 1 prior to it is to try to answer the question of how should the market price the barn raise, which is very difficult to do. There will be a 7-day bidding period under this proposal whereby people can bid an amount and a weather, an interest rate, and when there will be a bonus for bidding earlier, effectively to encourage participation in the bidding process. And the concept is that during the 3-day sowing period, let's say you bid at 100%, whenever the weather gets to 100% during the 3-day sowing period, assuming that there is still soil remaining, then your bid will clear effectively and you'll get in line. So that's how the barn race works.
Okay, I got a couple questions on that. I had assumed that the bidding period was to mitigate some of the time zone advantage to certain people. You know, like if you were to launch it right now, different people could participate and other people could not. So that's what I kind of assumed that the bidding period was for, and it might still have that positive effect. But I do like the idea that that you're able to set the perimeters of the pods that you're willing to accept, right? So what does the UI kind of look like? Like, is it going to be basically like I'm willing to give $1,000 and at 100% interest rate, and then basically that'll just happen, and all of your pods will be at 100%, all 1,000 pods or whatever it is, or will they be like the first one's 1,000%, the second one's 1,001%, and kind of like a normal weathering type thing?
Well, so your bid will be for a fixed weather, so they would all clear at the same weather. Now, I don't think you'll be able to bid 1,000% because it'll be capped at whatever that max is, 452%. But in theory, you know, that you could bid whatever you wanted. Now, the idea of the time zone is interesting. Frankly, hadn't really considered that, but it obviously, you know, clearly helps some people.
Yeah. So the sowing period is like what's the word I'm looking for? Based on the fact that there's not enough bids. Like if there are $75 million worth of bids, then there needs to be no sowing period, correct?
Well, if there were bids greater than the total amount of soil, you would still expect the sowing period to happen because it's a question of what is the most efficient price for Beanstalk that it can clear all of the soil at effectively. So there is a case where the sowing period doesn't last 3 days, but there's no case where there's no sowing period.
Okay, I see. Yeah. Because if everybody bids, like, let's say they're willing to accept 1,000 or 100%, and the soil turns on at 0%, so then there will be a time between 0 and 100 where people can.
Well, to start at 20%, but yes, exactly.
Okay. I get it. Now let's say it's a 10-day barn raise, right? Why not have the barn raise just go forever? Like the sowing period, why does the sowing period have to stop? Why can't it just go until the 75 million is achieved?
Yeah, it's a great question. So there's a couple of things here. One is philosophically, Beanstalk has to move forward. It's impossible to now get people to start lending to Beanstalk and just have this perpetual thing going on until it's filled. That's a crazy proposition to ask people to participate in at the beginning. The second thing is, from a structural perspective, the barn raise has 2 other phases. One is upon completion of the barn raise, based on the percentage of the total soil that was available that was sown, Beanstalk will scale. So let's say 50% of the soil was sown, Beanstalk will then scale by 50%, meaning all of the beans, the stalk, the seeds, the BDV, the pods, everything will get halved, such that the state of the system is exactly the same as the state of the system prior to the attack, just scaled down. And so in this context, the concept of having a perpetual fundraiser is very unattractive, because then, it basically limits the time at which this can happen. And just as well, now there's just a waiting game. And furthermore, from an economics perspective, if it's unclear what the max weather is at some point, and how much time there is, you do lose some of the time preference here, that there's an opportunity because of the amount of attention that Beanstalk has in front of it. So for a lot of different reasons, I think it just makes sense to try to capitalize in the short term.
Yeah, I guess that makes sense. Like, it would be pointless to even talk about a haircut if it could sow forever, right? There would be no haircut. There would be never a recovery haircut, right? So
unclear, but it's also unclear how long it would take, or how Beanstalk would actually restart. So a lot of different things are unclear.
So let's move over to like the people who were like the victims of the exploit, and how are they going to recover it? Like, you did explain it, but maybe we can reiterate it.
No, it's
so
good.
It's clear.
This is really the third part of the barn raise, or the third thing. So in addition to the scaling, whereby, let's say you had 1,000 beans deposited in the silo with 1,000 stock on top of that, you would now have, if it was scaled by 50%, 500 beans and 500 stock, right? So there is that haircut or scaling. However, the money that is being lent to Beanstalk is effectively being used to recapitalize the people that had their assets stolen, and therefore it's unlikely for lenders to be comfortable giving the money to the people that were stolen from without some sort of guarantee that they're not going to immediately run for the hills. Because let's be honest, Ceazor, a lot of people that just had all this money that was stolen from them, if it's given back to them, are going to want to leave as soon as humanly possible. And so the third stage is a vesting schedule, whereby, let's say you get 500 beans in your 500 stock. If you want to withdraw your 500 beans from the silo and sell them, you have to. There's a vesting schedule whereby you will have to forfeit the you can only claim the percentage of assets based on the barn raised pod line that has harvested. So I didn't say that very well. The percentage of the 500 beans that you have in the silo, you will be able to claim at any point in time, is a function of the percent of the barn raised pod line that has harvested. So if the silo depositor or the bean holder 100% of the money that has lent to Beanstalk during this crisis has been paid back, they don't take any sort of additional haircut or forfeit. However, if they claim and want to exit when only 30% of the barn raised pod line has been paid back, they're only eligible for 30% of their assets under this proposal, and would have to forfeit their rights to the rest of them. And that then creates an incentive for others who are also waiting to wait longer, because it's a game of chicken, where if people leave, then the people that stay benefit. So that's the third part of the structure, and it's designed to align the interest between the people that are lending to the protocol and the people that are having their assets recapitalized.
Okay, yeah, that makes sense. Basically, the people who were exploited have to, in order to get back all of the funds possible, like if you guys raised 75 million, in order to get back all of the funds possible, they have to wait until all of the pods in the barn raise have been hatched, right? So that leads me on to the next kind of question about this is, when does the hatching start? Like, are you guys going to produce liquidity pools at the end of the bidding cycle? And then the sowing period is going to actually require the buying of beans, so then pushing the peg up, and then pods will start hatching? Or are you guys gonna create the liquidity pool after the sowing 10-day sowing period, and then further after that, that's when the beans can start to print?
So again, I'm gonna push back on the you guys.
Yeah. I'm sorry. Yeah. The community. I'm sorry. When I say you guys, we'll call it Beanstalk, not Publius. Okay, we'll call it
Yeah.
that. Okay, when I say
But
you guys,
it
I
is an
mean the
important
entire community.
distinction.
You're right. You're right.
But the concept is that the protocol doesn't really have any beans to sell, and the normal concept of the protocol can measure based on the price of a bean and the liquidity in the pools how many beans it needs to borrow is fundamentally different than the current problem. Beanstalk needs to recapitalize liquidity pools. There are no liquidity pools at the moment. And so instead of the normal buying and selling, Beanstalk is likely in a classic fundraiser struct, which is something Beanstalk has done before, except sows in other stable coins effectively, if that makes sense.
Yeah. So just to be very clear here, the liquidity pool is likely to be created after the 10 days. And then
Certainly,
because that 10
there
days,
won't be any.
yeah,
There's no liquidity pool. There isn't even a bean token at the moment. The token itself is corrupted. So whenever Beanstalk is unpaused, that will be when there is a new liquidity pool, a new bean token. That will all happen at the unpause, effectively.
Okay. Yeah. Here's some more. There are two types of people who were exploited. There were people who had, well, maybe you can call it three, but let's call it two. The people who were in the silo, who had basically had beans or supplied USDC or stable coins of some sort, and were in the silo earning return on investment, right? Earning APY. And then there are also the people who had sowed and were holding pods, right? Now, the question comes based on those pod holders. Why not, instead of giving them back their pods, why not give them back their initial investment? Because some pods were sold at like 6,000% weather, right? 6,000% ROI. So instead of giving them back 6,000% ROI, why not just give them back the initial money that was put into those pods?
Well, there's a lot of different things that in theory you could do. The goal at a high level, Beanstalk wants to minimize as much of its debt it's not going to honor. In theory, it would like to honor 100% of its debt. So the concept is, what's a reasonable proposition to lenders that are going to come lend now, and reasonable to old lenders and current stockholders, right? So there's a lot of different ways to go about it. But in short, the haircut that's proposed, whereby if only 50% of the funds are recovered, all of the pods will get cut in half. That will more than halve the return of every pod as compared to its basis, effectively. And so there is an argument to be made that at this point in time, any pod in the pod line has a pretty low basis in beans. But, from a theoretical perspective, Beanstalk should still want to minimize as much of the pods it's not going to honor, and therefore taking a very aggressive stance on a pod haircut of negating all of the upside and returning just the basis. I think that would be very, very, very aggressive. So it's possible, but probably not necessary and very aggressive. Do we lose you, Ceazor?
Ceazor, do we still have you?
I'm sorry. Yes, you did. I muted my mic and talked to it for a minute and a half. Anyhow, so back to it. So also the other idea is that it would increase the amount of money that is required in the barn raise if you're paying the pod holders as well. Because right now you only need to worry about recapitalizing the lost money that was in the silo. If you're also repaying
I would disagree,
the pod
right?
lines,
Because the pods don't require any recapitalization. It's still a future obligation. So the only assets that really need to be recapitalized are the liquidity pools, right? So whether or not the amount of haircut that the pod holders take actually has no effect on the value of capital that Beanstalk needs to try to acquire.
No. What I meant was, if you were to give them back their initial investment, then you would need to raise that initial investment on top of what was in the silo.
Oh, but no one would ever want to do that, Ceazor. No one's going to lend to Beanstalk to, like, that's just crazy.
I think it's also important to note that, like, the pods that are the old pods, we'll call it, I don't know, we'll call it exploited pods or whatever. The old pods, they won't get that vesting haircut because they're behind the barn pod line, right? So they have no consideration.
One, there's a haircut, right? There's the haircut and then there's the vesting. So the pods will be haircut, assuming the full amount of soil is not sown. But then the question of vesting is slightly different, whereby the pod line is going to receive a third of all new bean mints going forward. So in short, it will be a decreased payout to the old pod line and further dilution on that front. But then under the current plan, when the pods harvest, then there won't be a second additional vesting schedule on top of that.
All right, I get it. So that takes me to my next question of the 30-30-30. Can you tell me if this is what Beanstalk wants to do or not, or is, like, as soon as the fundraise is done, the barn raise is done, the barn pods are at the front of the line, and then people start sowing or buying beans. Beans goes above peg, and then it starts burring. Who gets the first 3 beans?
One bean goes to the old pod line, one bean goes to the new pod line, one bean goes to stockholders.
Okay. And the person who has the old pod gets his bean. It goes into the silo because that's just normally what happens, right? So then if he tries to pull out the bean, does he get a haircut?
No. The concept is the assets that were there's going to be something called a ripening contract or whatever, in theory, whereby the assets that will be whitelisted in the silo are, let's say there's only one LP token when it starts. There will be beans, there will be the LP token, then there will be unripened beans and unripened LP tokens. And the concept is if your pods harvest and you deposit them into the silo, you're depositing beans, not unripened beans. Unripened beans would be the beans that are subject to the vesting schedule.
Got it. Okay. Now, is there any reason why, like, the community has not gone with any VCs, or did none come up out of it, or is there some sort of explanation why there wasn't we didn't just get a bunch of VCs?
You're talking about when Beanstalk launched, or now?
Right now. Yeah, right now. Like instead of doing a barn raise, why not just ask VCs to, like, hey, give us $75 million and we go? Like what's the reason for there not being a VC?
Well, there's a couple things. One, there's still something to be said for if there was an offer made to the DAO to try to take all or most of the barn raise. That would be something the DAO should consider. Why that hasn't happened, there's a lot of reasons in theory. From our expectation and our conversations, it seems like there's a lot of, venture capital that is inclined to participate in the barn raise, but not on the scale of, the full round, let's call it. And so that's one of the nice things about the structure of the barn raise is you do get the best of both worlds.
Yeah, I see. It's also good too, because then, like, the people who were exploited, they can, if they choose to, they can double down. They're not, like, basically, you're not selling the protocol to the VCs basically to have the pods for the rest for that first bit. So I like that. What else? Okay, this is kind of my last question, and it's about the protocol as generally as the future of Beanstalk. For most DeFi protocols, they have a tapering of APY. Like, APY goes up, And as TVL grows, APY goes down, and that's for different reasons, right? Where it might be because of tokens per second, right? But it's also because of like demand, right? Like especially with something like Beanstalk, like Beanstalk's demand has to stay high in order for the APY to stay as high as it was pre-exploit. Like I've been in Beanstalk for quite some time now. Money inside, it was like 20, 30% or something. And then all of a sudden it went 60, then 100, 120, 200, 300. It just ramped up very quickly, right? And that's because of demand, right? The peg just going up, 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 up. Do you think that Beanstalk will be able to maintain some high APY for a long period of time? Or is it more likely that it's going to go ramp up and then go to something like 15, 20%, or even something lower like 5 or 10%? I know it's impossible for you to know for sure, but like what are some expectations of people? Like when will the TVL be so high that it'll be really hard to maintain a high APY in like, just, it's an opinion, right? I get it's your opinion that I'm asking for.
Well, the main question is about scale and time horizon. Between here and true scale that you're talking about, the theoretical scale, there's likely to be periods of high APYs and zero APYs in the silo, realistically, at least on being seniorish. Now, there's always stock APYs, but that's different. Now, when it comes to at scale, you might expect the silo APYs, and this is like at true scale, something like the silo APYs to represent the actual rate of inflation or something like that. But it's unclear. It's unclear what the system would settle to at, hundreds of billions or trillions of dollars of TVL. But between now and then, you're likely going to have periods of time where there's very high APYs and very low APYs.
Yeah, of course. And it's impossible to say. Like, it's just, people will ask, like if I invest in this, like when will I get my money back? And that's a question that is very hard to answer because it depends on, like you said, like on scaling, on inflation, on maybe we can, I like to think of it as demand, like places to put beans where people don't sell them. People don't want to sell the beans so that the price stays above peg and the printer keeps printing, right? So I think this is kind of a difficult one for people to like kind of visualize, that there's no answer to this question. Like you can't say for sure that, it will burr at this much for this long. Like it's just not a question that can be answered, right? But maybe we can look at the former roadmap. Like, what were some of the things that you guys were working on? And again, you guys, I mean, Beanstalk in general, all of you guys. And what were some of the things that were being worked on prior to the exploit that had to go into the back burner or put onto the side and that might come back soon after the barn raise?
So, from a development perspective, obviously the security attack on the governance is a real hit, and it stinks. But the long and the short of it is the upcoming development plans were focused around the generalized silo with generalized convert, generalized minting, and the bean farm. And we would expect that the relaunched version of Beanstalk will include all of that. So long story short, there's obviously some delay associated now with the audits and stuff. But at a high level, feel like the development timeline isn't crippled by this, if it's maybe pushed back 2-3 months, but things are still full steam ahead, and there's a variety of different developers that continue to work full steam ahead on Beanstalk despite the extenuous circumstances.
Yeah, of course. Like I'm not expecting like, second week there to be like new PRs and stuff, like new updates and stuff like this. But like one of the things that I was looking forward to in the silo was like the ability for the silo to deploy LPs to Convex to farm CRV and CVX. So like this is not off the table, right? Like the exploit does not stop that from happening, right?
It's just a question of when it'll happen.
Exactly. So like these are the kinds of like goodies like that I was looking for, like something specific like that. Like what kind of things might have been happening right now if there was no exploit, last week or so. Now,
yeah, I think the
I know
convex one might be the best example, Ceazor.
Okay. Yeah, that's good. I don't really have any more questions, I think. I think maybe we can, Dumpling, maybe you can ask some people from the audience if they have any questions, and if not, then we can say our goodbyes, unless you guys want to say anything else.
Sure thing. I would just say, Ceazor, that I really appreciate, you mentioned the war room there that we had, on Sunday, and I really appreciated you being there and lending your support and just being an adult in the room. I just feel like I really appreciated you hopping in there, and yeah, I just wanted to say that, and your video being the initial way that I found Beanstalk. So just that your videos really do I think have a wide reach, and really appreciate that. So yeah, we'll go ahead and open up for questions if folks have questions. You can raise your hand. We'll give it a minute. I know people have to figure that out, and if not, no worries. We're doing pretty daily events, so we'll have something up tomorrow, probably a AMA in our Discord, so you guys can look for that. We're doing those typically in the evening, Eastern time. But okay, if there are no questions, then we have we got one question here. Looks like Ismail.
Hello, can you hear me?
Hello, yes.
Oh, hi. I just have a quick question regarding the in the proposal. I saw that there's something about a bonus, so I just wanted to know what's and it said like it still requires some details to be worked out. So I just wanted to know what's the deal with that, and if we have any more update on it.
With the bonus?
Yes.
Okay. Publius?
So don't actually have one. I think that there was some decision that was going to be made on it today, but I'm not privy to it at the moment. So I think that the questions were around the slope, the amount of the bonus, and around whether to have it be on the principal or on the weather. And I think it was people were leaning towards the weather. So the concept is that means that, let's say, the bonus, I think this is in theory what people were thinking with, but nothing's final. It'll start at 21% on the first day and decrease until 0% at the end of the bidding period. And if your bid clears during the sowing period, whatever your bonuses will get added to the weather. So if your bid is 100% and you got a 21% bonus, you'd get a 121% weather or something.
Okay, cool. That makes sense. Thank you.
Okay, bringing up Barty. Barty the Soil Sniper.
A quick question around, so next week when the barn raise begins, do we have any sort of marketing campaign? I know that there have been some discussions around PR, reaching out to all the journalists that have covered the hack itself to, tell them the next part of the story. But do we have anyone working on some sort of like bigger sort of communications and explaining the benefits and why this is such a great opportunity for people to get in? Just, I want to know what I can start copying and parroting, and I can say and like get behind that message and that vision as well.
The short answer is yes. I think there's a lot of different materials being put together. If you ask in the Discord, I'm sure people can direct you towards them. Don't know the best place to find them, but the long and the short of it is there's a lot of different stuff. And we're also trying to talk to some of those journals. We interviewed with the Wall Street Journal over the weekend. So they're in theory going to be writing about the barn raisers. So that's pretty cool. And hope to have a lot of different eyes and ears on this in a lot of different ways. And I think people are working pretty hard to make that happen.
Amazing. Thank you. I'm very excited to snipe some soil again soon.
Thanks, Marty. Okay, I got one more here. Crypto Planker.
Yeah, hi. Just a quick question on the bidding process. If I don't bid in the initial phase, am I automatically locked out of phase 2, or could I just jump in at phase 2 and bid?
No, there's nothing that precludes you from participating in the sowing period.
Okay, so do I have to look at the phase 1 kind of like a committed soft sounding?
Well, it's not a soft. The cap. If you bid, the only way your capital won't be lent to Beanstalk is if there's not enough soil by the time at the sowing period your bid would clear, if that makes sense. But
yeah,
not sure if you define that as soft or that's how it works.
I used the word committed because I couldn't come up with a different kind of terminology. So last question, so make some space for other people. So technically, I can put in a stink bid at the far end, and when we move to phase 2, I can automatically crank that in. Like I could go from 450 to 22% immediately, right? The only downside being the loss of the bonus and obviously the interest. Is that correct?
Correct.
Okay, that answers all my questions. Thank you. Oh, maybe one last one. Theoretically, just for my game.
I'm sorry, I gotta go.
Okay.
I'm sorry.
Oh yeah, sorry. This is we did schedule 1 hour, and Publius has a call at
No
the top
problem.
of the hour.
Appreciate it.
So sorry, and to Eightfold as well. But we can take Eightfold. We can take your question tomorrow. Thanks so much to Ceazor, Publius, and everyone for coming out. But yeah, sorry guys, we only booked an hour for this, so do appreciate it, and we'll see you all soon.